the growth in core Google websites only decelerated 1 point. The Wall Street was expecting anywhere from 300 to 400 basis points deceleration. So it was a solid print. They beat estimates on EPS as well. Slight in the margin expansion I was looking for didn't really quite come in. There was some incremental investments, but I thought that was okay. They announced a share buyback of roughly over $7 billion. It was a puzzle, so I majored in math discipline in undergrad, so I need to go back to my desk and try to figure it out. But overall, it was a solid quarter, and it's a stock you want to continue to own.
Now, Mark, you and I both spoke with a high-level Alphabet executive about this particular quarter. Focus again on mobile. The mix is shifting, which is why we're seeing some transition there. But also heavy focus on the power of Google Cloud and the power of Google Play.
Yeah, that cloud especially. I mean, we don't know exactly what the revenues numbers are. They don't break them out. But the percentage of the other revenues line where the cloud exists grew almost 40%. But Amazon also Amazon had a rough quarter, but AWS did really well, I think over 50% growth. So a lot of analysts and experts are saying that Google is really far behind on both Amazon and Microsoft in that industry.
They've been talking about this on the call. Google CEO Sundar Pichai. Take a listen to what he had to say about their cloud strategy.
Scaling up through partnerships is a big area of focus and investment for us. We are also establishing a large cloud machine learning group so that we can take advantages of working with our cloud customers and make machine learning more accessible to all of them. I would say other areas are hiring across sales, engineering, and marketing. And as we head into 2017, I expect cloud to be one of our largest areas of investment and headcount growth.
Now, back to the advertising business, though. Adam, this is your business. I mean, obviously, mobile is driving the shift, though they emphasize to us they're still seeing a great presence on tablets, on desktop. But what's your takeaway?
Yeah, I mean, it's similar to what we've seen in past announcements, that just the growth in clicks is just staggering and really makes up for anything that might be happening on the CPC side, which is decreasing a little faster than people expect. And that just shows the shift to mobile and the fact that it's not a perfect transfer. It actually grows the pie. People are spending more time on computing devices. They have it in their pocket. How many times are you in a conversation and it's just like, okay, let's just search this. And it's just like increasing that volume at such a rapid pace.
And is it really still a two-horse race between Google and Facebook?
We're actually seeing growth across all of our marketing channels. So, our customers want to be able to find their audiences wherever they go online. Google and Facebook are a massive share of that, but we're seeing, I think we're just in a really strong environment right now for performance marketing because we're really seeing all channels grow.
Okay, so let's talk about what's happening in the other bets. This is what always gets a lot of attention despite the strength of the ad business. Mark, of course, there's been a lot of turnover there. We've seen the head of Fiber leave, the head of GV leave, the head of Nest leave, the head of Project Win, their drone delivery service, leave. But on the call, it was emphasized to us that they continue to believe all of these things are still great opportunities, just that they want some more technical and financial transparency before they decide to re-accelerate investment. Yeah,
and I think that they've been pretty clear, at least for the past few quarters, that these are really early businesses, either really early industries they're going into. They're still testing the model. We saw the revenue climb a little bit with the other bets, which is mostly coming from Nest and Fiber. We also saw the losses minimize a bit, which suggests that maybe they've pulled back a little bit of the investment, right? I mean, certainly in Fiber, they're pulling back from 8 different cities. On the call, Ruth Porat said they still have 12 markets, and we're still a big believer in this model. But she sort of dodged the question about which is, since like fundamentally the Google Fiber, which has been their biggest investment outside of Google, is now really redirecting its strategy and cutting back.
Victor, given the strength of the core business, how concerned are you about the turmoil and transition that we're seeing in a lot of these other bets?
Yeah, I mean, it's somewhat concerning that you have multiple different executive departures over the past year at those other best segments. However, though, it's a small percentage of how we value Google as a stock. It doesn't really factor much into my sum of the parts analysis. I just view it as optionality. If any one of these, whether it be Fiber, which is scaling back on, it appears, Nest, or any, driverless cars, which is a long-term endeavor, any one of these in the future, if they, if the option, if they develop into meaningful businesses over time, fine, that's just more upside for the stock. But right now, it's a de minimis factor in how we value the stock. So we don't really pay much attention to it. We just actually watch the spending trends. Ruth Porat, the CFO, I think she's a little bit more disciplined. And so what you'll see over time, though, is some more cost rationalization at most of these businesses. And so I'm comfortable with where we are right now with those businesses. The core business is doing fine. They're benefiting from multiple different secular tailwinds within the ad space, whether it be video, search, and which is too programmatic as well. You know, the company's buying back stock. They continue to report revenue growth in the 20% range. There's other optionalities. Google Play, you talked about earlier. You talked about you know, the cloud services business, which is, I think the runway for that business is extremely wide. Amazon is in the pole position, but it's a massive business that's growing. No one can really size it right now. And I think you have Google, you have Microsoft, and other companies will come in and benefit. So I think we don't really pay as much attention to it on as far as our estimates and as far as our valuation for the stock.
Adam, quickly talk to us about some of those headwinds coming in the advertising business.
I mean, like I said, I think there's a lot more tailwind than there is headwind. I mean, we're still looking at a $70 billion TV market that's going to be migrating to digital over time. And, you know, companies like Google, companies like Facebook are in this pantheon of must-have marketing channels that you want to have on at all times. And as those $70 billion flow in, they're going to be well positioned. So, you know, I mentioned it's a little concerning to see cost per clicks decrease at an increasingly fast rate, but you know, the fact that the volume is making up for it and then some is a good sign. You know, marketers are increasingly performance oriented, they're increasingly data driven, and you know, that presents a lot of opportunities for folks in programmatic advertising.
All right. Adam Burke, CMO of AdRoll, Mark Bergen, our Alphabet reporter, Victor Anthony of Axiom Capital Management. Thank you all. Another stock we are watching, Baidu, the Chinese search giant, beating on profit after it cut spending on subsidies for on-demand services. These services, like food delivery, depend on discounts to grow users, but have steadily eroded its bottom line. Revenue was 18.3 billion yuan, in line with analyst projections. Coming up, Amazon shares tumbling after hours off the company's ever-important holiday sales forecast. The details next. And a reminder, all episodes of Bloomberg Tech are now live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 6 p.m. in New York, 3 p.m. in San Francisco. This is Bloomberg. Amazon shares plunging in extended trading as much as 9% at one point after the e-commerce giant lowered its forecast for holiday sales. The company reported a revenue of $32.7 billion in the third quarter and profit of $252 million. Investor expectations may have been a bit too optimistic about Amazon's ability to stay profitable while it attempts to expand in India, bring grocery delivery to more cities, and launch streaming services to challenge Netflix and Spotify. One bright spot for Amazon, Amazon Web Services, the company's AWS division reporting a third quarter revenue of $3.25 billion, up 55% from the same quarter last year. Here with me in the studio, Guru Hariharan, CEO of Boomerang Commerce and a former Amazon executive, and joining us from New York, Shelly Bounjo of Bloomberg Gadfly. So, Shelly, first of all, smaller than expected increase in profit, though still a profit. Is this basically Jeff Bezos saying, don't get too used to it? I never said this was going to last.
I think that's exactly it. Investors were suddenly, ratcheting up the stock to past $800, and on this promise that, okay, we're just going to keep seeing profits every quarter, and that's not what Bezos or Amazon is about.
Guru, as somebody who's worked at Amazon and worked with Jeff Bezos, bring us into the way he thinks about this.
Well, so this is a day and age of growing top line. You have to either grow fast or you're dying slow in e-commerce, especially today. If you look at this quarterly earnings, Emily, they've added $7 billion year on year on this particular quarter. And if you just put that thing in a little bit of a perspective.
They've also lost almost that much, which is the problem.
Well, they're losing a little bit or they've missed on the net income, but they're still in the black, which is a little bit, which is definitely not so expected out of Amazon. But just think, put it in perspective, the $7 billion that they have added is in fact more than, say, the combined full quarter revenues of Bed Bath Beyond and Ross stores in the last quarter. So that's the amount of market share growth that Amazon's quickly gaining in this entire market.
I mean, there's no question that Amazon has such powerful market share, such powerful mind share. Shelly, what would you point out about this cloud business in particular, given that Google and Microsoft are also making the cloud a huge priority, but Amazon seems to be so far ahead?
Amazon is definitely ahead, quite a few years ahead. Their cloud business is around $10 billion. Google's around $1 billion, Microsoft is $2 billion. They are definitely big competitors, and they're going into the market, and Amazon does need to be worried about it because that's really where all their profit is coming from, but they're still far ahead. And so for now, Amazon can use all that money to plunge it into the other investments that they're going to do, say grocery, building more warehouses to have enough space for their holiday goods that they're going to sell this quarter coming up. But it's not going to last forever, and I think Amazon knows that.
It's interesting comparing Amazon to Alphabet, Guru, because Amazon is also experimenting with a lot of different businesses, though they seem to be much more obvious business that there is a market for, things like grocery delivery. I mean, what do you think about their strategy around experimentation and whether or not these experiments are actually going to work?
See, the focus at this point in Amazon is all going to be on Q4. This is going to be a race for market share yet again. And they're going to continue to invest in their pricing technology and lowering prices, as Shelly pointed out, taking all the profits that they're taking from AWS and pumping it into pricing technologies, and also looking at expanding their warehouses and things like that they have to in order to grow in the holiday season. But looking forward, all of this sort of gets into this so-called Amazon's flywheel, which is essentially being the Earth's largest selection. They've missed out on groceries up until now, so adding some of the grocery elements would in fact fuel that flywheel that they have. They'll also be lowering pricing from that standpoint, lowering the cost infrastructure to serve all of this, and improving traffic. So that's how they're going to grow with this.
Shelly, I wonder about shipping costs, because they were up more than 40%. At some point, is the hammer going to come down on customers, or is Amazon going to be able to keep up the amazing shipping benefits that every Amazon Prime customer has?
I think that's what caused this big profit, not miss, but this kind of change that we weren't expecting because, they said that they had built 18 more warehouses and that they're really getting ready for this holiday season. They're being very strict on their third-party marketplace vendors, saying, we don't want anything in our warehouses this holiday season that's not going to be bought during the holiday season. Take it out, put it back in after January. So they're super focused on that, and of course, taking on FedEx and UPS, not waiting around to see if UPS and FedEx are going to have enough, trucks and planes to carry their stuff, but also building their, buying their own, and going into drones, things like that. Those are things that Amazon, has set its mind on to say, we have to do this. We have to be able to do this, and the reason is because Prime is really where everything is for them. I mean, they need those Prime members. Their Prime membership program is incredibly important to them, and at some point they're going to also hit a peak Prime as well, and what they're going to have to do is continue to convince Prime members to spend more, because there's only so many people eventually that they're going to have to sign up for as customers.
Quickly, Guru, how important will Alexa and Amazon Echo be to Amazon's future? Is this going to be a whiz-bang kind of cool gadget, or is this a central part of the strategy?
We think it's one of the faster growing businesses for Amazon, and more importantly, it actually adds into the ecosystem that Amazon has, where they already have a bunch of traffic coming to their website, but this is a chance for Amazon to grab the traffic which is not online. Like, think about when you're interacting with Amazon Alexa, this is the time when you're waking up or you're having lunch or dinner, you're talking, and that's traffic, and that's coming to Amazon. So this is if this plays out well, this is going to bring a step function in improvement in traffic, and that's how they're going to be looking at this.
All right, Boomerang Commerce CEO Guru Hariharan, former Amazon executives Shelly Banjo of Bloomberg Gadfly, thank you both. Still ahead, Twitter sketches out a plan to become profitable by next year. How Jack Dorsey is making the case for staying independent. Next, this is Bloomberg. Is showing initial signs of progress in third quarter results. Revenue and user growth beat analyst expectations, helping CEO Jack Dorsey make a case for staying independent while seeking to restore growth. Twitter also sketched out a restructuring plan aimed at becoming profitable by next year. First step, eliminating about 9% of its workforce. Melissa Parrish, senior analyst at Forrester, joins us now from New York. So are layoffs enough, Melissa?
Well, I hope so. I would say I'm cautiously optimistic. I think that, layoffs are always incredibly difficult, but I think the plan, if they stick to it, sounds pretty good. Double down on the product, focus on that engineering talent that you've got, shore up the core services and ad products. That sounds like the right way to go to me.
Most of the layoffs are coming from the marketing and sales departments. They're also shutting down Vine, the video service. But what do you think of the live strategy, live broadcasting, NFL games, Bloomberg television shows, presidential debates? Is that really enough to sustain the future of Twitter?
Is it enough? I think it's a step in the right direction. The beauty of Twitter and the thing that I think sometimes gets lost in the conversation about financial results is that there is real passion in the user base. It is the social network of record for all of those live events that you just mentioned. And because of that, there's something special about the audience that flocks to Twitter to talk about the presidential debates or to view live events in a way that they don't flock to Twitter's competitors. So the question is, can they monetize this audience? Can they figure out advertising products that are specific to both the medium, the device, the network, and the audience, specific to all of those things, that will generate enough revenue? What I don't think makes sense is to sort of rest their hat on advertising that looks exactly like television. Twitter is not television. The audience is not the television audience. The device is not a television device. And so I think it's going to take some real ingenuity to figure out how to take advantage of that live streaming and that kind of functionality. But I think it's a smart move.
To that end, we did hear from CFO Anthony Noto, who's been pushing this live strategy about the composition of the people who are watching these live streaming shows on Twitter. Take a listen to what he had to say.
We did the debates live, which reached record DAUs. They also had a very young audience, with 70% of the audience less than 35 years old. And we saw incredible reach, over 3 million on a number of the debates.
Melissa, Bloomberg has reported that Anthony Noto has very much become the sort of heart and soul of the company, a big cheerleader. Of course, he's got experience in football, so maybe that's partly where it comes from. But do you think that Jack Dorsey can continue to do two jobs? Or, is the pressure now greater than ever that he needs to focus on just one?
Yeah, that is the question, isn't it? And I don't mind saying that people much smarter than me when it comes to analyzing the executive ranks of companies have pointed out that this is a challenge. How can any CEO, no matter who you are, run two technology companies at the same time? I am really relying on those folks who have analyzed that kind of situation many more times than I have when I say it surely sounds like Twitter needs a strong full-time CEO. I don't see how you sort of get around that at this point.
And quickly, when do you think Twitter will become profitable on a quarterly basis?
If I knew the answer to that, I would be in a much higher pay grade.
All right. Melissa Parrish, Forrester Senior Analyst, thank you so much for breaking it down.
Thank you.
Well, Apple and Microsoft unveil revamped computers in back-to-back product events. So which made a bigger splash? We will compare. And if you like Bloomberg News, check us out on the radio. You can now listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Let's begin with a check of first word news. Russian President Vladimir Putin wants to set the record straight about relations with the United States. In a speech today, President Putin said the U.S. is hysterical about Russia's alleged influence on next month's election. He added that the Russian military threat is a myth and that the country doesn't plan to attack anyone. The Associated Press cites a state official in North Dakota who says authorities are using non-lethal shotgun beanbag rounds and pepper spray to remove Dakota Access protesters from a camp on private land. The protesters refused to voluntarily leave the path of the pipeline construction. Earlier, officers converged slowly on the camp from two directions, telling the protesters that if they didn't leave, they'd be arrested. The Justice Department is charging 61 people in the United States and abroad in connection with a call center scam based in India. Callers posed as tax and immigration agents, threatening arrest, deportation, or other punishment unless money was paid. The scam tricked at least 15,000 people into shelling out more than $300 million. I'm Mark Crumpton. This is Bloomberg. It's just after 6:30 p.m. Thursday here in New York, 9:30 Friday morning in Sydney. I'm joined by my colleague David Fickling with a look at the markets. David, good morning.
Good morning, Mark. And yeah, the world economy seems to have a little bit of a spring in its step these days, but you're not seeing it in New Zealand. The local index there has opened down 0.1%. However, look across to Australia and Japan. Futures on those indexes are looking pretty positive right now, up about 0.5%, 0.6% in Japan. That 0.5% number, remember that because negative 0.5% is where analysts expect to see Japan's CPI index when it comes out later on today. Of course, raising Japan's inflation to a sort of 2% level has been one of the core tasks for the Japanese government. It's not really happening. We've really seen this negative 0.5% level for most of this year. And the Bank of Japan looks like it may be pushing off its 2% target into 2018. Also, we'll be looking at China's energy industry. Sinopec, the largest oil refinery in the world, reported a big jump in profits overnight. We're going to see PetroChina also today. China's Exxon, it's sometimes called, and a lot of the big Chinese coal miners are going to be reporting today. And if you look at the demand for a lot of oil and stuff, it's peaked in recent years. That's what we're looking at today. I'll be handing back to Bloomberg Technology. Thanks very much.
This is Bloomberg Technology. I'm Emily Chang. Apple is looking to reclaim lost market share with a refreshed Mac lineup. That includes its first MacBook Pro overhaul in 4 years. Here's Apple Marketing Chief Phil Schiller.
This kind of design is only possible with a unique collaboration between our hardware engineering, our operations, and our industrial design team working together to solve problems others haven't even tried to tackle. It is the new gold standard in notebook computers, and it enables innovations not possible before.
The standout feature is a new digital display on the top row of the keyboard called the Touch Bar. The new Pro will also include Apple's Touch ID fingerprint sensor and a trackpad that's twice as large as before. But it's got some serious competition. Microsoft held its own product event yesterday, and its Surface line got several updates with positive reviews. So which company moved the needle more? Joining us now to discuss, Creative Strategies Principal Analyst Ben Baharin and our Bloomberg Tech reporter Mark Gurman. Mark, I'll start with you since you reported a lot of these changes that we saw with the lineup, the Mac lineup today. Anything that surprised you, and what do you believe is the most significant?
Not a ton of surprises today. Beside the fact that they very much focused on one single product. You don't often see Apple have an entire event around just one product, a MacBook Pro, that only represents such a slim percentage of the company's overall revenues. In terms of what I found interesting, I think that the Touch Bar, as you mentioned at the beginning of the show, is very interesting because you can build applications and they're allowing developers to do this as well, so it's not just for Apple's first-party apps. So this might create an ecosystem of new applications that basically merge between this touchscreen and the actual, screen on the laptop.
There were some negative reactions to the touch bar, tweets like, we waited this long and all that's new is a touch bar. Shouldn't it be placed lower by the trackpad? It's going to be awkward. Ben, what do you think?
I mean, I think, when you look at what Apple's doing, and interestingly, I think the touch bar is sort of an admission on their behalf that some sort of a touch experience belongs on, our clamshell, right? People have argued about this for a long time. Apple said we're not going to put touch on MacBooks or PCs themselves, but this is a recognition that there are some things that are nicer when you can use your finger. And so I thought it made sense, right? Philosophically, they're saying, move your fingers forward, keep the touch where your fingers are versus going like this, and that makes some sense. So it really just comes down to the workflow. How do people prefer to use these things? And anytime we see, just looking at what Microsoft did and what Apple did, anytime we see innovations in hardware, it's designed to create innovations in software. So really, both of these products are dependent on what the software community does with the things that they're now enabling, whether that's a big touch screen and a pen and a dial or the touch bar. It's really the software community that's going to advance that feature meaningfully.
So what's your take on Microsoft versus Apple this week?
I mean, I think a couple of things, right? I mean, overall, I don't think Microsoft was not just a hardware Surface event. I think for Windows, they did a ton to move the Windows platform forward. And I think that's important because, again, right, if we just look at the two companies, there's exponentially more people, consumers and workers, who are on Windows than on Macs. And I think the way that they're starting to sort of come away from this, like, productivity is just Excel, and they're getting more exciting about creativity and 3D, and you can see some HoloLens stuff that's on the roadmap for next year at $300. That's pretty exciting for the Windows ecosystem. So I think they did a lot to move the Windows ecosystem forward.
Mark?
I would have to agree. I think they're working on two different spectrums here in terms of their computers. Microsoft came out with this Surface Studio, which basically looks like an Apple patent from 4 years ago, where you can, use it like a normal desktop computer, like an iMac, and then push it down and draw with it, and has the cool dial. It's very interesting that Apple decided, clearly, for whatever reason, not to take that approach with the iMac. In terms of the MacBook Pro, it's a totally different direction than the latest Microsoft laptops. I've been testing one, and you can either have it in a clamshell mode, like a normal laptop with a keyboard, touch the screen, or you can pop the device off, and it's like you have a laptop when you want a laptop, and then you have a tablet when you want a tablet. Instead, Apple wants to sell you both. From a financial perspective, that's the way to do it for Apple, a company that's worth more than any other tech company in the world. But from a convenience standpoint, some people might like the Microsoft approach. But of course, hardware is starting to become a little bit more commoditized. Anyone can get OLED technology, anyone can get processors, anyone can build their own graphics engines now. And as you see with the Google Pixel phone, it really comes down to the software. Do you want to be part of the Windows platform? Do you want to be part of the Android platform? Or do you want to be part of the iOS platform?
We can't forget what they talked about with regard to TV today. Twitter coming to the Apple TV set-top box, so the live shows that are streaming on Twitter, including our show, you can now see streaming on Apple TV, but also this new TV app, which allows you to access Apple TV on any device. Ben, what do you think of these developments?
Yeah, I mean, pretty straightforward, right? They're taking an approach that, I mean, this idea has been around for a long time, right? I've got my content, I want to watch my content, and I want a better way to find and use it, right? So the way I've sort of articulated is that they're essentially bringing us a modern guide. So all of the things that we can access, from sports to news apps to any range of different products or content, pieces of content we can put now, and they're bringing that to the Discovery fold. What was interesting, though, was that this got talked about quite a bit, that companies like Netflix and Amazon aren't particularly jumping on board, which is interesting because, again, those companies do want to control more of the experience, where Apple's trying to say, well, we can do a better UI and we can just plug content into that. So that's going to be a little bit of a battle. I think everybody's going to agree with the vision. It's fantastic. The demo worked really well. Siri worked really well for you to watch a bunch of different stuff that you wanted. But obviously, things like Netflix and Amazon and those other types of vendors that have really valuable content, it behooves the consumer for them to get into, but I just see a little bit of a rub that's going to happen at the moment.
All right, hang on just a second, because I want to talk about a huge deal that we are following. Qualcomm agreeing to buy NXP. The price, $47 billion in cash. This an 11% premium on Wednesday's close. The deal marking Qualcomm's most significant foray outside the world of smartphone chips and patents. NXP is the biggest supplier of chips used in the automotive industry, a market that grew 10% to $29 billion last year, according to IDC. The deal is seen as a diversification strategy for Qualcomm as mobile phone growth loses steam. Qualcomm CEO Steve Mollenkopf spoke to Bloomberg about the synergies of the two companies. Take a listen.
We think the products, we think the culture actually from the perspective of, what really drives them, and it's innovation, it's customers, it's focus, it's discipline. All those things we think are consistent with our culture as well.
Ben, what is the significance of this deal if the future is not just chips in smartphones, but chips in everything?
Well, and I think, again, that's where we're going, right? Our belief is that everything will be connected in some way, shape, or form through a semiconductor and a modem and a connection to the internet. And obviously, NXP was really moving on a good, sort of path there in connecting lots of things from IoT. They were number one in IoT, number one in automotive, all areas where Qualcomm was actually weak. The interesting thing about this deal, which makes a ton of sense on paper, even though some of the investors we've talked to are a little concerned about like the integration and kind of what that looks like from, a Dutch company and a San Diego-based company. But I think on paper it makes a lot of sense because they do have complementary portfolios, what Qualcomm does in the SoC and what NXP, who then acquired Freescale, does in the peripherals and accessories. So it does put them into a strong position, and it's evidence again of what we're seeing in the consolidating semiconductor industry. But we're now sort of toward the end of this where there's not a lot of big deals to happen. But this was one of those sort of big ones that now solidifies Qualcomm and could put them anywhere to the top of revenue, not just in the second or third in semi.
Qualcomm has obviously been a leader, Mark, in smartphones, smartphone chips, iPhones. NXP chips are actually in the new Google Pixel smartphones, as I understand it. What's your take?
That's absolutely right. And to add to what Ben said, if you look at the chips industry in Apple specifically, they've been moving away from Qualcomm sort of quickly the last few years. They started developing their own chips in their chip labs, and now they're diversifying the modems. So a chunk of the iPhone 7s have Qualcomm modems, and another chunk have Intel modems. And by buying NXP, Qualcomm sort of, says, hey, to Apple, one of their former big customers, we're coming back to your iPhone because who makes NFC chips and other chips that are so important? NXP. And the same thing is going to happen here with Google. So it's a good purchase from that perspective because you know how much volume Apple has and you know how much volume Google might have in the future.
All right, Mark Gurman, our Bloomberg Tech reporter, Ben Beharin of Creative Strategies. Always great to have you here on the show.
Always great to be here.
Coming up, TransferWise taking aim at the U.S. with a new business platform. We'll catch up with the CEO next. This is Bloomberg. London-based TransferWise is taking aim at small businesses in the United States. The company just announcing a new product launch, TransferWise for Business. a low-cost, easy way for small businesses and larger companies to transfer money internationally, they say. TransferWise CEO Taavet Hinrichus joins us now here in the studio. Did I say that correctly? Hinrichus? Hinrichus. So first of all, talk to me about who's going to benefit from this and who specifically you're taking aim at.
So we launched a business being focused on consumers at first, but we quickly realized that consumers tend to have companies they work for or they are entrepreneurs themselves. So they started asking us about, can I use this for my business? So we took that feedback into account and started building a product which is focused on small to medium businesses. So companies who are doing international transfers, they might have employees abroad, they may have customers abroad. So we took all that feedback and made a product which is targeted for them specifically.
Now, your competition is major foreign exchange services, correct, that are also trying to take on this market. So how do you stack up against them?
So we're really looking at doing the same thing for businesses which we've done for consumers. So doing a very easy to use product focused on very quick transfers for low cost. So typically we're 8 times cheaper than using a bank or a competing service in the US.
Talk to me a little bit about Brexit, because you guys were vocal Remain supporters. How does that impact your business, and what's your take on the overall political situation?
So we still don't really know what Brexit means. I think that's what's most frustrating about this. We had, during Brexit, we had a good time. We had triple the normal volumes. And now the whole ecosystem in London is really worried about, so what is going to happen? So being in this limbo state of in between actually is the worst. So we're worried about talent. Can we still keep on hiring people from abroad? What's going to happen to regulation? What's going to happen to passporting? So all of these things which still need to be figured out. So today we're kind of in between in a state of uncertainty.
Your headquarters is in London, right? So has it impacted your business at all thus far?
So we haven't had an impact yet, and I think I would even guess that volatility actually means more people are transferring money, which is overall good for the sector and good for us.
You also believe that companies are going to be hiring more talent abroad, and hence the need for your business. Explain the trends you're expecting to see.
So I think overall we probably see much less borders in the world, and it's a much more flat and interconnected world. So it's becoming normal for companies to have employees abroad, to engage in international trade, and as such there's going to be much more need for companies and consumers to keep on moving money internationally. So
how much of the business is peer-to-peer versus not?
So when we look at our bigger routes, this is majority peer-to-peer.
Okay, and talk to us about the future of the business. Questions about when are you going to get to profitability? What can you tell us about that?
So we've been around for more than 5 years now. Past 12 months, I've been really busy focusing on global expansion. We've launched in Australia, in Japan, and the company is trading more than $1 billion on a monthly basis now. So making us one of the biggest digital money transfer companies. Looking forward, we're continuing the expansion. So the markets we've launched in Australia, Japan are still really nascent, so focus on that, focus on new segments as the business launch now. We also have great partnerships we've launched with banks in Europe, so looking at expanding on this.
Do we expect another funding round or an IPO next from you guys?
So we're focused on growing the business for now, and as such, I think staying private is the best way for now. And we're really well funded, so no news on that front.
All right, Taavet Hinrichus, TransferWise CEO, thank you so much for joining us. Great to have you. Tomorrow on Bloomberg Daybreak Americas, Piper Jaffray's Gene Munster joins for full analysis of Amazon and Alphabet earnings before the opening bell. That is 8:15 New York time. And this weekend on Bloomberg Television, we will bring you our best interviews from the week, including my convo with T-Mobile CEO John Legere and his thoughts on the proposed AT&T Time Warner tie-up. Stay tuned this Saturday, the best of Bloomberg technology. This is Bloomberg. Turning now to the biggest U.S. IPO of the year. Shares of ZTO Express falling in their trading debut after the company raised $1.4 billion. ZTO Express gets most of its business from Alibaba, which accounted for 75% of the company's parcel volume in the first half of this year. Our Bloomberg IPO reporter Alex Barinka spoke to ZTO CFO James Guo at the New York Stock Exchange today. She started by asking about the relationship with Alibaba and whether he was concerned that so much of his business is coming from one customer.
So now over 71% of our parcel volume is from Alibaba. But actually that has dropped from about 80% a few years ago. So we are also diversifying our business to some non-e-commerce area. For example, delivery of business documents and help some of the manufacturers or retailers to ship goods across the country.
That was James Guo, ZTO Express CFO, with our very own Alex Barinka. And moving on now to some of the biggest tech companies in the world out with third quarter results, from Alphabet to Amazon. Our Bloomberg editor-at-large, Corey Johnson, has been going through the numbers and joins us now from LA with some more context. So, Corey, give us the context on profitability. Of course, Amazon has been treating investors to a better profit for the last few quarters, but this profit seemed to return to business as usual. What's your take?
Yeah, I mean, I really think that the thing to focus on here is that the very different businesses of AWS on one side and the Amazon retail business on the other. And it's never been so clear as it was in the quarter that they reported tonight. I mean, what you saw in terms of AWS growth, while it's slowing down, the growth rates are truly fantastic for this big giant business that's doing over $3 billion in revenues for the quarter. You still saw a growth rate of over 50%. Now that's coming down in every quarter just a little bit, but 55% growth rate of such a big business is a big deal.
So talk to us about the future of AWS here. We were speaking about it a bit earlier on the show, especially with Alphabet reporting earnings as well. Great progress in their cloud business, yet it is still so much smaller than Amazon's, as is Microsoft. The cloud is expanding, but is it possible for Google or Amazon or Microsoft to catch up to Amazon given their great head start?
Well, you know, Microsoft's growing at twice the rate. The overall cloud business is growing at twice the rate of Amazon's is now. But still, that growth rate of Amazon is fantastic, and it has a flywheel effect. Now, the margins for AWS were fantastic at 26.6%. So even as they cut prices, it's more and more profitable for them. Compare that to the margins of big Amazon, the entirety of Amazon, where you saw, as you were discussing earlier in the show, you know, this giant collapse in what was already a barely profitable business, but the collapse of those margins down to 1%. Now, that's the operating margin number, which I think we have as well, but we'll stick with that slide right there. So, you know, it's now 10% of the revenues virtually of this overall big business. So it is growing so fast that it is really an important factor when we're looking at sort of how the business works, how the business is growing, and how the business is getting to profitability. But compare those 26% operating margins for AWS to the 1.8% margins, the operating margins for all of Amazon, which is really just this dramatically different number. Indeed, you could look at it a different way. All of the profits for Amazon in the quarter, in fact, over 100% of the profits in the quarter were from Amazon Web Services.
So then talk to us a little bit about what this means for the retail business. Obviously, we've seen shipping costs go up 43%. Amazon is adding warehouses, but you know, it's still a very expensive operation, and the real reason that they're just breaking even.
Yeah, well, I mean, the shipping costs, again, is part of this sort of flywheel effect that they've got of sort of running revenues through the company, taking whatever cash flows they have, reinvesting those cash flows into building a bigger and bigger business. The thing that really sticks out, again, though, is this AWS business. I mean, conceptually, if they can run the retail business at a loss and derive whatever profits they need to derive from the AWS business to keep going and keep cash flowing and keep getting bigger and keep building more distribution, it becomes a bigger and bigger business. And it seems, you know, we don't need to look at this quarter to tell us that Jeff Bezos is not really looking for, you know, profits. I mean, look at this. 150% of the profits were from Amazon Web Services in this quarter. It's simply an amazing thing. It's something we saw similar to the September quarter last year, but that's just a giant, giant number. It shows you how perverse the effect of AWS and its profits are on a business that is being run right at the line to show no profits in any other way.
All right, Corey Johnson, our editor-at-large, joining us from LA today. Corey, thanks so much. And that does it for this edition of Bloomberg Technology. Tomorrow, we will hear from Khosla Ventures founder Vinod Khosla, who says the majority of jobs will be done by machines in 40 years. That full interview airs on Bloomberg Studio 1.0 this Sunday, 9 a.m. Pacific. We'll give you a quick teaser tomorrow. Remember, all episodes of Bloomberg Tech are now live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays, 6 p.m. in New York, 3 p.m. in San Francisco. That's all for now. This is Bloomberg.
studios in New York City, this is Charlie Rose.
Welcome to the program. We began this evening with two Supreme Court justices in conversation at the New York Bar Association. We talked to Ruth Bader Ginsburg and Sonia Sotomayor.
I thought of myself in those days as a teacher. My parents thought that teaching would be a good occupation for me because women were welcome there, and they weren't welcome as doctors, lawyers, engineers. I realized that I was facing an audience that didn't know what I was talking about. If they understood race discrimination, that was odious. But most men at that time thought that, yes, the law was riddled with gender-based distinctions, but they all operated benignly in women's favor. Like a woman didn't have to serve on a jury if she didn't want to. So that was a benefit.
The eavesdropping reflected curiosity. And I think that that's what drove me as a lawyer.
Tonight, a rare conversation with two Supreme Court justices, Ruth Bader Ginsburg and Sandra Sotomayor. As you know, the Supreme Court kicked off its term this month with only 8 justices following the death of Supreme Court Justice Antonin Scalia. Tonight, we hear all about the court and the love of law from 2 justices.
Let me just begin and take note of the fact that they both have written books. Sotomayor's book was called My Beloved World. Justice Ginsburg's book was called My Own Words, which is a compilation of speeches and essays that she has written. And I want to start with this. Looking back on your life, Justice Ginsburg, and thinking, even though it was incorporated in speeches, what was that like for you? To put your own life in focus, and how was that?
My Own Words, as you said, is a collection of speeches, bench announcements, tributes to colleagues. It's not
a biography.
It's not a biography of me to the extent that my life is told. It's in the introductory passages that my official biographers wrote. That biography will come out sometime in the distant future.
But your book, My Beloved World, you said, I am my mother. What did you mean?
As I tell her, good and bad. I am my mother's drive. She aspired to be more than her circumstances. She wanted to desperately go to college. And she lived in the poorest circumstances in her home community in San Hinmang. And she would watch the college girls walk by her house, going to the post office, because that was the center of the town's social life at the time. And all she dreamt about was someday going to college. And getting my brother and I into college was her living her dreams. Now, she wanted me to be a journalist. I don't think she was ever convinced that there was much value in law. Perhaps when I got on the Supreme Court, she might have changed her mind, okay? But I lived that dream for her. And I've lived all of her dreams because she set the example for me of striving always to do better, to trying to be the best person that I humanly could be, because that's what how my mother lives her life. So I try to emulate all of those things in my mother that are the best. And then when I do the things that are bad, I remind her that, that's the problem with being a little duck. You copy everything,
You once said that watching child scanning adult for cues and listening in on their conversations was an important aspect of growing up for you.
Sure. Who doesn't like to eavesdrop? But I think that the eavesdropping reflected curiosity. And I think that that's what drove me as a lawyer. I mean, I always tell people, and it's not the perfect analogy, but being a lawyer is like being a voyeur into other people's lives. You participate a little more than voyeurs do, thankfully, but you get to, in every case, you get to learn about how people or an industry or a government entity interacts in the world and what they do and what's important to them. And to be able to enjoy that process, I think you have to have curiosity. And so listening to others in their conversations was a way of teaching myself things that I would not have otherwise learned so easily.
Justice Ginsburg, when did you fall in love with the law? Was that?
People sometimes ask me, did you always want to be a judge?
Yeah.
Or more exorbitantly, a Supreme Court justice? And when I think of what life was like in this city in the 40s, no girl, it would not be her wildest dream to be a judge because there simply weren't any. Franklin Delano Roosevelt appointed the first woman to a federal appellate court in 1934. She, Florence Allen from Ohio, she stepped down the year I graduated from law school, 1959, and then there were none. And then Johnson appointed Shirley Hufstetler. She became the first ever Secretary of Education, and then there were none again. So I didn't think about being a judge until Jimmy Carter became President of the United States. And he looked around at the federal bench and he said, you know, they all look like me. But that's not how the great United States looks. He was determined to appoint members of minority groups and women in numbers, not as one-at-a-time curiosities. He appointed over 25 women to the federal district court, the trial bench, and 11 to courts of appeals, and I was one of those lucky 11. No president, by the way, ever went back to the way it was. President Reagan didn't want to be outdone, so he made a nationwide search for the first woman.
Sandra Day O'Connor.
And it was a brilliant choice.
In fact, you have said that when she left the court, retired, and Alito came on, it marked a change in the court.
Yes.
Because she was gone.
Well, I have said more than once that the term that she left, whenever the court divided 5-4 and I was one of the 4, I would have been one of the 5 if she remained with us. So there was that enormous difference.
But my question, too, going back to both of you have been influenced by people. Your mom, your husband, Marty, your late husband, had a huge influence.
Yeah.
You have said to me that you would not have made it to the Supreme Court without him.
No question about it. People who observed at the time said, well, Ruth would have been on a list. Maybe she would be 22 or 23. But it was Marty who made her number 1, and that's...
How did he do that?
He had a little book of people that he contacted. They were... mainly my academic colleagues. In those days, I was teaching at... Well, this was before my first good job in D.C. Yeah. He got in touch with academic colleagues, with lawyers who knew me from the lawyering work that I had done. And he had many letters sent to the president. But I think the most important thing of all, and this was almost out of the blue, my rabbi, my guide, was Senator Moynihan. Yes. And how did that come about? Well, it was a connection that Marty was very pleased to have, but it didn't come through him. The president was on a plane with Senator Moynihan going to some Democratic function in the city and said, Pat, please tell me, who would you pick for the Supreme Court? And Senator Moynihan said, well, Mr. President, I'm not a lawyer, so you shouldn't be asking me that question. The president said, I value your judgment. Who would you pick? And Senator Moynihan said Ruth Bader Ginsburg. Why? Why? Because Dean Griswold, the longtime dean of Harvard Law School, thinks she's very good. And this is the dean that said I could not have a Harvard Law degree because I didn't stay there for my third year. Life is, so many chance things occur, and you don't know whether they're going to turn out to be good or bad, but this one was certainly good. There was a celebration at the court of the 50th anniversary of the building. So the building was completed in 1935, and this was 1985. Dean Griswold was then Solicitor General. He was to make a speech about great advocates before the court. And by 1985, he realizes that he can't have a list that's all men. So after he finishes with Thurgood Marshall, the next person he mentions is Ruth Bader Ginsburg.
Yes.
When I went through my nomination process, I was told that everyone should have had a Marty Ginsburg as a muse in their life. He apparently came into the preparation session with folders including all of Ruth's speeches, her entire schedule for her entire life, and binders filled with tax information.
Well, that part, the press reported inaccurately because they said the reason that Ginsburg had no problem with the taxes or the babysitter is because Marty was a tax lawyer. But in our home, our personal life, I did all the taxes.
Yes, and guess who did all the cooking?
Oh, yes. When all the president's men, and they were only men, descended in my apartment to go through my papers, Marty made a delicious lunch every day.
I mean, it was at one point, he would do all the special occasions, and you would do dinners for the kids during weekdays. And finally, your daughter came to you and said, maybe you should just give that up too.
Well, in fact, my daughter, who is an excellent cook herself, she learned from a master. I was the everyday cook, so I had 7 things that I made. And when I got to number 7, we went back to number 1. And they all came out of the 60-minute chef. That meant no more than 60 minutes from when you walk in the door till it's on the table. Marty would never allow me to cook for company, and he was the weekend cook. So my daughter Jane, long in her high school years, realized that Daddy's cooking was infinitely better than Mommy's, and that Mommy should be phased out of